you for joining us today and having the time to answer a few of our questions. For the majority of the attendees here, no introduction is needed. But for those listening in the interview, why don't we begin with the introduction, a little bit about the company, and perhaps highlight any of the major developments.
Certainly. I'm John McCluskey. I'm president and CEO of Alamos Gold. It's a company based in Toronto, listed on the Toronto Stock Exchange and the New York Stock Exchange. I founded the company back in 2003. Our foundation asset was the Mulatos project in Mexico, which we turned into a producing mine. And we've been operating, it's been in production since 2005. It's produced close to 4 million ounces of gold. It's generated nearly 800 million in profits, and it's been just a wonderful asset for us. And it really formed the foundation for the subsequent acquisitions that we would make, and we've ultimately turned Alamos into a company producing 600,000 ounces a year from 4 mining operations, but with the wherewithal to grow to north of 1 million ounces a year from those same operations over the next 5 years.
Sure. So I'm sure you've ran through this quite a bit at the conference, but in your assessment, what are the main drivers of the gold prices in the current market?
Yeah, this is a subject that more and more people are taking an interest in. I've been on the World Gold Council since 2008, among other things. They do great work in terms of gold research, market analysis, that type of thing. It's been pretty clear from the data that the Gold Council follows that this market sort of move has been largely underpinned by central bank buying, which has been underway for quite a number of years. If you track the buying from the Chinese Central Bank, it's been quite steady for the last 5 years and even before. So central bank buying has been one of the main drivers, and only recently are we starting to see sort of broader institutional participation where you'll get investment funds buying into gold, and now even some retail investor interest, which we see coming in through the ETFs and slowly but surely into gold equities. The gold equities have been quite late to the party in this particular bull market.
Sure. With all that, what is the pitch this year at the conference, engaging with a majority Nordic investor base? Why should they trust you with their investment and your management team with their investment?
That's putting it directly. In fact, some of the funds here have been participating in conferences in London and the US where we've come into contact in the past. So they're not entirely outside of that market, but we are meeting many more investors here in Stockholm this week. And for us, it's refreshing to meet many new faces, many new investors, people who have been watching the gold sector, particularly over the last 18 months or so, as you've seen the gold price rise in more dramatic fashion. Why would they put their investment in Alamos and trust Alamos? Well, here's one thing that you can't buy, and that is a track record. So I mentioned, we started this company up in 2001. I took over as CEO in 2003. I worked for a couple of years behind the scenes as a director of the company, uncompensated. I put together the acquisition of our first asset, the Mulatos project. We have a proven track record dating back to the beginning of acquiring projects at very attractive prices. We essentially buy counter-cyclical. We invest both through exploration and capital development into turning these assets that we buy into producing mines. And we've generated tremendous profits from the production of gold. That's what we do. Last year we produced something like 575,000 ounces of gold. Our all-in sustaining costs would have been around $1,400 an ounce or so. We're an extremely profitable company, and we have a great growth profile. We have a very strong reserve base. We're not, in other words, we're not a Johnny-come-lately, and we're here today and we'll be gone tomorrow. Well, put in context, we had roughly 1.8 million ounces in reserves in our North American assets back in 2015. Today where are we? About 25 million ounces. So we've been highly successful through both acquisition and through exploration drilling in developing a very strong reserve base that will sustain the production from our company. When I talk about reaching that million ounce a year production rate, we could sustain that for 20 plus years. So we've got strong reserves, we've got first-rate production, we've got a great track record for good production, safety track record, environmental track record, the relationships that we've established over the years in the local communities where we operate. We have an award-winning track record on that front. We some 14, 15 consecutive years, we've won an award from a human rights organization in Mexico for the way that we've developed our assets there and the relationships that we've fostered in the local community and the good we've done there. I mean, you've got to be a good company from a variety of perspectives. You've got to be a good employer. You've got to be a good neighbor. You've got to be profitable. In other words, you've got to be able to show strong returns to your shareholders. And we've been successful on all those fronts.
Sure, absolutely. So markets are constantly evolving, especially this industry, highly volatile. With that, how effectively is the company managing its capital this year and also looking to Q1 of next year?
So in terms of managing our capital, we tend to look at it with three buckets in mind. We have one that's oriented towards growth. A third of our capital should go towards growth, a third towards strengthening our balance sheet, and a third towards dividends and share buybacks. And you'll see us allocate that money somewhat differently depending on what part of the cycle we're in. But over time, that will be how it all falls out. So right now, we're in a very strong growth phase in terms of our development. We're developing a brand new mine in northern Manitoba. We're undertaking a very significant expansion project at our Island Gold project near Wawa, Ontario. And then we have a brand new underground mining operation that we're building at our mines in Mexico. So it's a very significant growth phase for us. It's going to see us take production from this current rate of around 600,000 ounces a year to about 1 million ounces a year. So while that's going on, you'll see us allocating a lot of money to growth capital. But as that spend comes off, as each project is completed, you'll see our free cash flow start to grow. And as that happens, you'll see us start to pay out more in terms of dividends and share buybacks. We've been paying a dividend. We've consistently paid a dividend since 2010. And we maintain the dividend. The yield has become smaller as our share price has grown, but the share price growth has largely been driven by the success we've had in terms of our exploration and production growth. So it's still an attractive time to invest in the company because the growth in our net asset valuation, that also drives the share price. But the time is coming where we're going to reach that million ounce a year production threshold, at which point the cash flow is going to really take off, and you're going to see us increase our dividends in order to match that.
Absolutely. In your interactions or while you're engaging with the Nordic institutions, the Nordic retails here at the conference, and also in general as well, what do you wish they knew more about Alamos Gold heading into your interactions with them?
Well, we're a brand new name. We've been around as a company for nearly 25 years, but by and large, we're a brand new name. And so the first thing you have to do when you're meeting new investors is essentially establish your credentials. They don't really know much about who I am or where the company came from, but we've been a very successful company. We've grown from really less than $1 million in value when I started it in 2001 to $15 billion today. Now that's a tremendous amount of growth.
So heading into your one-to-ones, what is the most critical question these investors should be asking Alamos?
I can tell you the question that I get repeatedly.
Sure.
While we've been here, the gold price crossed $4,000 per ounce. And the question is, where are we in terms of this cycle, and where do you see the gold price going? I mean, people are quite curious about that. Now, that doesn't have anything specifically to do with Alamos, but it is a question that I see coming up over and over. And I think it's because, these investors are turning their attention to gold, and when they look at a chart, they can see that really in the last couple of years, gold has run from effectively around the $2,000 level, a little more than $2,000, to $4,000. That's a pretty significant run. And only now are they really turning their attention to the commodity. Well, have they missed the run? Is this the peak and they're going to step in and start buying just in time for it to turn around and fall? I think they're quite curious about that. And I've been a natural bear. I started off in a bear market back in the early 1980s and working in the sector. And it basically stayed bearish for 20 consecutive years. And 20 years of living through a bull market as the whole first part of my career, I learned to be bearish. And we also learned how to survive and make money in tough markets. So for me, this is the cycle that I've been anticipating for a decade. It's here now. I don't believe by any means we're in the late phase. I think we're in a very early part of this cycle. While central banks have been significant buyers, the broader spectrum of investors, including institutions and retail, they're not holders of gold. I think if you look at U.S. institutions, those are the statistics that I'm familiar with, they don't have more than 3% of their assets allocated to gold investment, whether it's equities or the metal. So that says to me that there's a big scope for investment demand to come into the space. We haven't even seen it yet. Why would they do it? Well, you're going to see continuing U.S. dollar weakness. I think the instability in the world that the world essentially is living through under this American administration, it's a destabilizing factor, and people are inclined to seek shelter and stability in these rocky times. And gold has a long established reputation for a safe haven asset in times of instability. But I would say another thing is coming into view, and that is there are deep-seated problems with the US dollar, and the US dollar is the world reserve currency. If that one is running into trouble, where do you go? Well, gold is the only place to go. Gold is the only financial asset that isn't somebody else's liability. And at the point in time where you can't trust the world reserve currency, where I think that really leaves gold as the court of last resort.
Absolutely. We appreciate you taking the time to answer a few of our questions, and best of luck at the remainder of the conference.
Appreciate it. Thank you.
Thank you so much for your time.
Yeah.